President Donald Trump of the United States this week pulled the country out of the world's leading climate treaty, as well as numerous other international organizations stepping up his campaign to disrupt years of global collaboration aimed at addressing various issues. In a memorandum, Trump announced that the US would leave the UN Framework Convention on Climate Change and 65 other mainly environmental, development, and democracy-focused international groups. The world is indeed becoming less multilateral and more multipolar, if not unipolar. The difference is the dissolution of collaboration pacts that drive solutions that are more acceptable to groups of countries and not to individual entities working on a solo basis. In an earlier chat, we presented scenarios of the emerging global order, which now seems to be moving faster into a sharper multipolar direction with increased fragmentation, which will of course raise the cost of doing business and demands a continuous strategic rethink of supply chain arrangements, especially for global businesses. Everyone is talking of a new global or international world order that is emerging as multilateralism, as we used to know it, crumbles, giving way to a different multipolar world ruled by more transactional instincts. The year 2026 will be one of important transitions as one gets better clarity on what the new normal could be. I prefer to refer to 2026 as the year of pragmatic transitions driven by the motivations, interest, and actions in a triangle of power featuring the West and its allies led by the US, the Eastern nations led by China and close allies like Russia and Iran, and the South, that is Africa, Latin America, Middle East. The East has found an opportunity to woo southern nations as US withdraws from agreements like AGOA, World Health Organization, and so on. And BRICS is extending its arms of friendship as it builds an alternative financial ecosystem to compete with Bretton Woods. France's President Emmanuel Macron recently warned of the risk of the disintegration of the international order that brought peace to the world for decades. This was as he met Xi Jinping in Beijing amid growing trade tensions between China and Europe, adding that the world has the responsibility to know how to overcome disagreements and leverage the many ways of achieving convergence towards a more effective multilateralism. Alexander Stubb, President of Finland and author of the forthcoming book, The Triangle of Power, Rebalancing the New World Order, in an article in Foreign Affairs, wrote of 3 scenarios of a new global order that will gradually settle in and drive events over the next decades. The probability of occurrence of the scenarios will depend on events in the transitional period and especially in how today's multipolar arrangement evolves. What happens in the United States midterms? How aggressive is China going to be as multilateral checks and balances weaken? Both Western and Eastern powers know they have to fight for the hearts and minds of the South, but doing that presents challenges as they also uphold their narrow national interests in a tougher geo-economic context. In the first scenario, Alexander Stubb predicts ongoing disorder and multipolarity with remnants of the old order and selective respect for international rules. This, you could call business as usual or lingering transactionalism, could become the new reality for a while. Political power shifts imminent in upcoming US midterm elections could also be an important referendum on business as usual. The world has coped well, however, with this scenario, adjusting to the different global trade ecosystem with less costs than previously thought. This scenario may also be more short-lived, as failures due to lighter rules eventually lead to calls to rebuild dismantled institutions. It could also be a path to the second scenario. The second scenario you could call reformed multilateralism, or a different multilateralism, and it's one which has learned from gaps in post-World War II institutions that catered for narrow Western interests, but also one that recognizes that more advanced economies should not be subjected to unfair weights. For this scenario to happen, the major powers, the United States, China, Europe, have to see the upside of global collaboration on economic growth, for example, and want to agree a basis for a different pact that rewrites institutional rules like WTO rules and reforms UN governance ecosystems. Let's just say this scenario is, from what we know today, least likely for now. The third scenario is further erosion of international order, its rules and institutions, leading to a collapse and inability to solve acute crises or conflicts. Stubb says in this scenario that strong men and non-state actors will be able to fill power vacuums left behind receding international organizations, and many would say that this has the lowest probability of occurring, but this cannot be ruled out. Whether the world lands on an extended period of multipolar disorder or a reformed multilateralism depends on many unknowns, and 2026 will clear some of the fog. The uncertainty means business needs to be highly flexible, being ready for anything, and suggests more than adequate balance sheet buffers, strengthening its core business, going back to fundamentals, and ensuring innovation is well anchored on buyer needs and value. Throughout 2025, resilience has been key for businesses worldwide as they faced challenges including shifting national and global geopolitics, some still coming out of COVID-related fiscal challenges, conflicts like Ukraine, Russia, and Israel, Gaza, and insecurity in Africa. Companies that concentrated on strengthening performance on carefully identified and stable success factors were able to grow market share, milking new opportunities. Ongoing supply chain recalibration and new technology adoption will continue to present significant business opportunities in the evolving triangle of power, as the times, of course, will be calling for much more geopolitical vigilance. German President Frank-Walter Steinmeier has strongly criticized the US foreign policy and urged the world not to let the world order disintegrate into a, quote, den of robbers, unquote, where the unscrupulous take what they want, adding that global democracy was being attacked as never before. Meanwhile, Harvard professor Geeta Gopinath, former IMF chief economist, in the Financial Times warned this week that it would be a mistake, however, to think the global economy is unaffected by tariff fights and policy chaos. Instead, she argues that structural damage reveals itself slowly and always too late to be reversed. Gopinath argues also that Europe has tried to defend the rules-based global system, but it also still needs to pursue many internal reforms as it deepens its single market, raises productivity and positions as an attractive destination for global capital seeking diversification. All this as Europeans are trying quietly and gradually to decouple from US financial infrastructure and be less reliant on the United States. 2026 is unlikely to be the year when course correction to how it used to be will happen. Instead, it looks more like a year of further consolidation of the multipolarism. It could also be the year where we achieve better compromises that heal old, real, or perceived rifts. hello and happy new year. This is Global Business Insights, where we bring business perspectives to help you interpret trends and navigate what many expect to be a very unusual year. In the US, the Department of Labor reported that new unemployment insurance claims rose to 208,000 for the week ending January 3, higher than last week's revised 200,000, but below the 210,000 estimate. The stronger US Department of Labor data curbs Fed easing bets and supports US dollar strength. Global defense stocks rallied yesterday, extending gains after Trump called for a $1.5 trillion defense budget in 2027. Still, in the US, the trade deficit contracted sharply in October, hitting the lowest level since mid-2009 as imports declined, a trend that, if sustained, could see trade again adding to economic growth in the fourth quarter. The trade gap narrowed 39% to $29.4 billion, the lowest level since June 2009. Exports rose 2.6% to a record $302.0 billion in October. Goods exports jumped 3.8% to $195.9 billion, also an all-time high. They were boosted by exports of non-monetary gold and other precious metals. But exports of consumer goods, mostly pharmaceutical preparations, fell, as did those of other goods. Alphabet overtook Apple as the second most valuable company in the world, closing Wednesday's trading session with a market capitalization of $3.89 trillion, topping Apple's $3.85 trillion. It marked the first time the Google parent company has surpassed the iPhone maker in value since 2019. Populist fragmentation seems to be gaining ground as French President Emmanuel Macron yesterday announced that France will oppose the signing of the free trade agreement with the Mercosur bloc, which includes Argentina, Brazil, Paraguay, and Uruguay. That's the free trade South American bloc. President Macron stated on the social media platform X that despite significant concessions for European Union farmers, there is unanimous political opposition to the agreement within France. As the US seems to be going it alone, China is stepping up to the plate in wooing Africa in the ongoing recalibration of influence and trade relationships. China's Foreign Minister Wang Yi is on an annual New Year tour of Africa and yesterday met with Ethiopian Prime Minister Abiy Ahmed. He called for greater cooperation in infrastructure, green industry, the digital economy, and other fields. China's Foreign Minister Wang Yi says Beijing is working to enhance alignment of development strategies with Ethiopia to promote their all-weather strategic partnership to new heights. The US economy added 50,000 jobs in December, below analyst predictions of 60 to 70,000, indicating a cooling labor market. The unemployment rate fell to 4.4% from November's 4.6%. November job gains were revised downward to 56,000. The data supports expectations for further Federal Reserve rate cuts, with markets anticipating 2 more cuts this year. Global stocks rose ahead of the US jobs report and a Supreme Court tariff ruling. Japan's Nikkei climbed 1.6%, boosted by fast retailing's earnings. Oil prices stayed volatile due to risks in Venezuela and Iran, while defense stocks went up. Well, that's it on this special edition of Global Business Insights. This is Bodeo Shosami again. Happy New Year. Thanks for watching. Bye-bye.